All right. So thank you for everybody for coming. This is the FHA Loans 101 presentation. We had some technical difficulties with the original link, but thankfully this is going to be recorded. So I'm going to post the presentation on my YouTube as well as my social media, and also email it out to everybody just in case they couldn't make it because the link got all messed up. All right, so let's get right into it. So this is a presentation basically around the basics of the FHA loan. FHA loan is a very good product. It's a government sponsored product, and it's particularly for, some people think it's for only first-time home buyers, which a lot of first-time home buyers do use it. But it's mostly an available product that helps you obtain lending or a mortgage on a home where you might not be able to conventionally. It just has better pros of it. There's some cons of it as well, which I'll go over, but this is basically what the presentation is going to be about. All right, so who am I? My name is Wendell Butler, and I'm a licensed loan originator in Massachusetts. I specialize in first-time home buyers as well as first-time investors, and I work for Envoy Mortgage. Bam. All right, why Envoy Mortgage? So Envoy Mortgage is a nationwide mortgage lender. We only focus on mortgages. We're not like a bank where we, do business bank accounts, checking, savings. Our specialty is mortgages and residential, so it's 1 to 4 units. We have over 20 years of experience in this company, and we have a 98% customer satisfaction rate, which is pretty good. If you ask me, it could be better. It could be 99% or 100, but nothing's perfect, right? There's a full array of lending products that we offer. We aren't a broker, so we hold a lot of the mortgages ourselves, and the products are catered to our own company as well and our investors. We have incredible updated technology. So all the time, Envoy Mortgage is coming out with better ways for borrowers, better ways for realtors to work with us, such as there's a new app that came out that allows you to calculate potential mortgages on your phone right at your hand, as well as obtain your pre-approval at a click of a button right through your phone, which is amazing. It makes it a lot easier for, especially in the market that we're in, when you have to get a pre-approval quickly. You might have to change some numbers on it, edit it. You can do it all at the hand of your phone. And it just really helps you get an upper hand in this market for buying properties. We close on time every single time. We work for you as hard as we can, to the point that we will always find a way to close for you. We always do the right thing. So we're always straightforward up front with all of our costs, fees, everything. We don't hide anything, and we are, in this for you. So we cater our products and we cater our calculations and everything to your goals. And we want to get you to the next step of your home buying experience, or we want to just make it the most smooth process possible to purchase a home. All right, so what are government loans? So an FHA is a government loan, and there are a few other government loans as well, but basically a government loan is a loan that is insured or backed by the government, which protects the lender against defaults on payment. So because of that, it results in usually lower interest rates. There's higher qualification ratios. There's lower mortgage insurance premiums, and it allows us to obtain more eligible buyers. So they have a little bit more leniency in the government loans to help buyers purchase property and actually own a home, compared to like conventional loans, which might have a little more stricter guidelines. So government loans help buyers in many ways. One way is that they offer great rates. So usually the rates are lower than the conventional loans. In this market, it's been kind of even, but normally in a normal market, it is They usually do have better rates. They allow buyers to qualify for higher loan amounts. So they allow you to stretch your purchase power a little bit more than if you were using a conventional loan. They help reduce your monthly payments. So your principal, interest, taxes, insurance payment, which is the mortgage, all point to one. Government loans usually help lower that because of the rates that they give and the products that they have. They provide low, very low, and sometimes actually no down payment options. So that is huge for people that might run into the barrier of not having enough money to put down on the property with a conventional loan. Government loans allow you to, go as low as 3.5% for FHA, or even 0% down payment for like a USDA loan or a VA loan. And there's also state government loans as well, which might have 0% down. There's higher seller concession amounts. So this allows, when you're in a market that is a buyer's market, you can negotiate more with the sellers, and the sellers can offer seller credit back or concession to help you pay closing costs or help you pay down the rate or anything like that. Government loans allow you to utilize a higher amount from the seller because sometimes it's capped at a certain percentage for conventional loans. Government loans will allow you to take a higher percentage and be able to negotiate a little bit more than if you use a conventional loan. There's possibly no mortgage insurance, such as the VA. So if you're a veteran and you use a VA loan, you can have no mortgage insurance at all, even if you put down less than 20%. And they are only for owner-occupied borrowers only. So you can't be using this for straight investment properties or vacation properties or second homes. It has to be a home that you're going to move into. So I touched on this a little bit, but these are the few government lending products. There's FHA, which is what we're going to go over here in this presentation. There's the VA, which is the Department of Veteran Affairs loan. I'm a veteran myself, and I actually specialize in VA loans. So if you're a veteran and you're interested in hearing more information, you can always reach out to me. We have the USDA loan, which is United States of Agriculture loan. That one's a little bit more rare in this area because it's more just based on like urban areas, like away from cities, you can use them. But there's a lot of, cities around in Massachusetts. It's kind of like a condensed area. So it's hard to use that product around here, but there are some areas where you can use it. All right, so FHA loans. FHA loans are loans that are insured and managed by the HUD, which is the Department of Housing and Urban Development. There's a few advantages of the FHA loan, such as there's low down payments. You can go as low as 3.5% down. You can use them on 1 to 4 unit properties, so you don't only have to use it on single family. You can use it on a duplex, on a 3-family, on a 4-family. You can move into 1 unit and rent out the other units. And you can use that future rental income to actually help you qualify, which is a great option, especially if you want to get into a multifamily with a low down payment like 3.5%. Usually on conventional loans with a two-family, you have to put down 15%. With a 3 or 4, you got to put down around 20 to 25% down. So it really allows you to get into those homes for a low down payment and start leveraging and gaining, immediate net worth and equity from the property as tenants pay down your mortgage. Below 600 credit scores can be eligible. So for conventional loans, usually 620 is the lowest you can go for most lenders. For FHA, you can go as low as 600 or even a little bit lower. And it depends on your other financial aspects, like how much you make, how much you have saved, etc. But they have a little bit of wiggle room there that allows you to use the FHA loan, even if your credit scores are low. There's higher debt to income ratios. So that means that if you have a high monthly debt that's preventing you from using a conventional loan, an FHA loan, they might allow you to stretch that limit a little bit more and allow you to have a higher DTI ratio, which stands for debt to income, which is basically the amount of monthly debt you have to the amount of monthly income that you have and the percentage between that. So the higher debt to income ratio that you can get with a loan product, the higher purchase power you'll be able to have. And FHA allows you to stretch that a little more compared to conventional loans. Buyer eligibility can happen 3 years after foreclosure. So say you had a foreclosure, which is unfortunate. You can use an FHA loan 3 years after, compared to conventional, which they make you wait usually up to 7 years. So it allows you to get back into home ownership quicker and faster than going to conventional product if you had a foreclosure. Permanent and non-permanent residents are allowed. So any resident can use this, even if you're a non-permanent resident. Can close 30 days prior to starting a new job. So say you graduated college and you got a job offer, and you're going to start getting paid, obviously, and working. You can close actually 30 days before you even start that new job, which with conventional, it's a little more strict. They're going to want you to have that job lined up or start working, get paychecks in. FHA is a little more lenient on that. There's no income limit. So some government programs, if they're statewide or something, they have income limits where if you're making a certain amount, you can't use the product because they're catered to people that don't make as much money to help them get home ownership. With FHA loan, there's no income limits at all. So you can be making, $1 million in a year, and you can use an FHA loan. Again, the 6% seller concessions is great. That's higher than most other loans that you can utilize negotiating a seller credit up to 6%. And then there's also FHA 203Ks, which is, say you're buying a property that is a little run down, but you want to renovate it. You can actually combine the whole mortgage plus renovation cost into your loan. So say you buy a property for $100,000 and you want to put $35,000 into it. They're going to give you a $135,000 loan, minus the 3.5% down, obviously. And then you can use that $35,000 to update the home, which can immediately build equity in the home because it's going to be worth more after you're done rehabbing it. And you can also make your home the way you want it, which is awesome. And it's all just bundled in one program. All right, some disadvantages. So the property must be in good working order, with no safety or functional problems with it. So that means that, things that they touch on is, say like the roof has shingles missing, or there's peeling paint where there's lead. There's no handrails where there's steps and stairs. They're going to want you to fix those, or you won't be able to get an FHA loan on it. If you go the FHA 203K loan route, they will fund it, but you have to have within the work the aspect of the work that's going to be done, which your general contractor will let you know. You have to include fixing those property problems. So there's mortgage insurance for the life of the loan with 10% down or less. So if you put down 3.5% up to 10% or less, you're gonna have a mortgage insurance for the life of the loan unless you refinance it or sell it. Mortgage insurance is for 11 years if you do 10% or more of a down payment. So even if you pay more than 10%, mortgage insurance will be there for 11 years. Even if you get to the 20% equity in the property, where usually PMI or mortgage insurance will drop off conventional loans, for an FHA loan, it will stay on there for 11 years until you refinance or something. Mortgage amounts are limited by county. So depending on what county you live in, you can only use up to a certain loan limit, which I'll show later on in this presentation. Student loans have to be counted with 0.5% or the actual payment that's on your credit. So even if your student loans are in deferment or you're not paying them, we're going to take, say it's $1,000 student loan, we're going to take 5% of that, 0.5% of that as your monthly payment, and that's going to go towards your debt to income ratio. Condo eligibility. So FHA has a very strict guideline for condos. That's one big disadvantage of it. There are some condos that do work with FHA, and you can sometimes come across a condo that doesn't work for FHA, and you can apply and get it accepted by the FHA program. But this link here kind of shows you what condos are accepted and what aren't, and they're pretty scarce. Upfront mortgage insurance premium. So when you close on an FHA loan, you're going to have to pay 1.75% of the loan. Either upfront, you can pay it cash, or you can roll it into the loan, but it's just an extra 1.75% of the total, loan that you're going to have to pay down eventually, and that's paid upfront as a one-time thing, and then you also have to then pay the monthly mortgage insurance. It has a kind of a bad reputation for sellers. It's a good reputation for buyers because it's a great loan product, but for sellers, they sometimes they won't accept your offer as much because FHA loans, since some buyers use FHA loans that might be not as strong financially, or something like that. They might not have like a really strong application. They tend to fall through a lot more. Plus all the guidelines of having the home have no like damages or roof problems or anything like that. The appraiser could eventually make the deal fall through. So FHA loans, they don't fall through a lot if you're with a good lender. Envoy Mortgage, especially with Envoy Mortgage, I've never had an FHA loan really fall through. But there's a higher chance that it could fall through compared to a conventional loan. That's why sellers kind of are wary of it. But especially in this market where it's a seller's market, it's a little harder to get it accepted. But it is a great loan product, and especially when it's a buyer's market, people accept it left and right. All right, so types of buyers. So a lot of first-time home buyers of all ages use FHA loans. Self-employed borrowers that need high debt-to-income ratios also like to use FHA loans, and they work well with it. Newly divorced individuals like to use FHA loans because it helps you get into a new home, once you're separated, for low down payment. Kids purchasing for parents and vice versa. People upgrading to a better school system, so moving into a better area, better school system far away, and buyers with credit stolen or low credit score. Granted, there are a lot of buyers that have excellent, like high credit, high income, lots of savings that like to use the FHA loan because of the point that you can get into a home for low down payment. And especially if you use a 203K method, it's a great option to really build equity and net worth immediately within your property without using anything out of pocket for the renovations. So these are some of the FHA lending limits in Massachusetts. So if you look at the one family section right here, so this is the loan limit that you can have. So that is the loan, that's not the purchase price. So 3.5, so 96.5% of the purchase price has to be at this amount or lower. And this is the one family section. And this is the two family section. So that's the duplexes. And as you can see, they go up each unit that's added. 3 family is a little higher, and 4 family is a little bit higher. And as you notice, like in Boston, they have a lot higher rates, a lot higher limits, because Boston's a little bit more expensive. The property there is higher value. So they have higher lending limits towards that area. And then if you look at, Worcester, Mass, where they have a little bit lower, or you look at Providence, they're a little bit lower. There's different areas, but it's all specially catered to each county. And that's why you see different numbers here. It's based on the price of each county, really. All right, so this is the condo eligibility website that I was referring to earlier. You can go to this site to see if there's any condos that are FHA approved. So say if you get a pre-approval for an FHA and you're trying to look for a condo using FHA, you can go to this site and you can actually search by county, you can search by zip code, you can find the specific condos within your area that do accept FHA, and you can see if any are on sale. So FHA appraisals. So appraisals have 2 objectives within FHA. One is to determine the market value, and the other is to do an inspection, a broad inspection, to make sure that it meets HUD standards for health and safety. So this is the list that they kind of usually look for when they're looking at a property. So all bedrooms should have egress to the exterior for reasons of fire safety. A bedroom window will suffice as long as it's large enough to allow egress. So that just means that it needs to be exits in each room of the property. So if you have a bedroom that has no windows to the outside, then it won't pass FHA. Or you have to do a 2 or 3K loan and open up that window, like create a window, or you have the seller create a window before selling it to you, which in this market will be pretty much impossible. But if it is a buyer's market, there are times where they may do that for you. So many homes built before 1978 still contain lead-based paint, which is a potential health hazard. In these homes, the appraiser will check for damaged paint. So this is anything that's peeling, chipping, etc. And such conditions must be corrected before the loan will go through. So if the appraiser walks through the property that you're trying to buy, and they see that there is, on handrails, on windowsills, there's some peeling paint, and it ends up being lead paint, they're going to need the seller to basically encapsulate that paint, fix it or chip it off and repaint it, or just paint over it and encapsulate it to make it so it's not chipping anymore. That is just because it's a health hazard. All steps and stairways must have a handrail for safety. So this is commonly cited discrepancy during FHA appraisals. So a lot of homes, especially the older homes, won't have like handrails with where you walk up steps. It's kind of an easy fix. You just kind of put a handrail there and just screw it in. But this is like the number one thing that FHA appraisers will note on, and it's just for the safety of the stairs and stuff. The heating systems must be sufficient to create healthful and comfortable living conditions inside the home. So the heating systems just must be working properly to maintain heat in the home. The roof should be in good state of repair and must keep moisture from entering the home. It should provide reasonable future utility, durability, and economy of maintenance. So that means that the roof needs to be pretty much have like no shingles missing. It needs to not have like a ton of mold on it. It needs to look like it's going to last like another 10 years or so. If it's falling apart, the shingles off of it, and it looks like it only has like 2 to 3 years of life left, the FHA appraiser might say that it's not good to go, and they might either try to make the seller patch it, or you just won't be able to buy it unless the roof is replaced. But again, if you do a 203K loan and you're trying to buy a property that is in a little bit of shambles, you can use that money to rehab the property. And as long as you follow the appraiser's guidelines and include that in the aspect of work, you can be able to close on that property. The foundation should be in good repair and able to withstand all normal loads imposed on it. So they're going to check the foundation as well and make sure that it's not cracked, there's not problems with it, it's not bending, to be sure that the house will, you'll be able to handle all like normal loads of anything that you put into the house. All right. I would say if there's any questions, but again, I sent out, the wrong link was sent out and it had some technical problems, so a lot of people couldn't make it. But if you do have any questions, you can always reach out to me. This is how to reach out to me. My name is Wendell Butler again, and my email is wendell.butler@envoymortgage.com. My cell phone is 860-377-3224. And again, I work for Envoy Mortgage out of Medway, Massachusetts. And then this is also my website where you can go to contact me, or you can go to fill out an application if you're interested in possibly purchasing a home. At Envoy Mortgage, we offer obviously FHA loans. We do conventional loans. We have a lot of our own products, and I'll help you find the best product that's available to you to help you get into the right home and complete your home ownership dream. All right. So thank you for coming again. And this will be posted on my YouTube as well as my social media. I'll send it around and also send an email out to everybody as well, just so you have the link and can watch it whenever you get a chance to. All right. So thank you so much and have a great rest of your day.